Hello, and welcome to the 2022 North Coast Ventures Annual Meeting. My name is Todd Fetterman, and I'm the Managing Director of North Coast. We're here on location at the offices of Thompson Hine, the sponsor of this year's annual meeting. As of this morning, we had over 800 registrations, which is terrific to see. Given the size of the audience, and given that we're regulated by the SEC, we'd like to take a moment to remind everyone of a few quick ground rules. If you are watching this, you are a guest at a private meeting of North Coast Ventures. Any opinions expressed are intended to be educational in nature and to share perspective on the startup environment. These opinions should not be used as a basis for investment decisions now or in the future. And lastly, this is not an offer to invest in or purchase securities. With that said, we're excited to share what we think is a great agenda. Tonight, we'll share updates on our funds and the approach we take to leverage the North Coast network. The CEOs of 5 of our fastest growing companies will present 5-minute updates on their ventures. We will review the portfolio and offer select company updates. And lastly, we'll wrap up the evening with a fireside chat with Chris Gorman, the CEO of KeyBank. In that conversation, I'll ask Chris about the future of FinTech, Key's approach to innovation, and how they work with startups. Before diving in, I'd like to offer a few important thank yous. First, to our main event sponsor, the law firm of Thompson Hine. Thompson Hine's New Ventures Group is a longtime supporter of North Coast Ventures. They're strategically focused on representing startups and VCs across the country, but especially here in Northeast Ohio. The group represents high-growth companies of all sizes and stages in industries including technology, healthcare, consumer products, and more. The group's attorneys guide clients through their growth and funding cycles, offering customized counsel on everything from day-to-day legal matters to funding transactions and exits. We appreciate how the New Ventures Group at Thompson Hine contributes to the success of the startup ecosystem, and we look forward to continuing to work with them in 2022. I would also like to thank North Coast Ventures' nearly 30 Innovation Council members. By partnering with North Coast, their sponsorship helps drive our community events and contributes to the growth and success of our portfolio companies. I'm going to call out a few logos here. The first is Jumpstart, a longtime supporter and financial partner in the management companies of our first 3 seed funds. The second is the Ohio Development Services Agency. This is the group that oversees the Third Frontier program, which across our 6 funds has provided almost $25 million of matching capital. We would also like to thank the investor members of North Coast Ventures. We are deeply appreciative of their support as investors and their commitment to engage in our process, share industry expertise, and to leverage their own networks to help build successful startups. Lastly, we would like to thank the more than 1,000 team members of our portfolio companies. Their talent, energy, creativity, and perseverance is what we truly invest in. In the face of a challenging past 24 months, these teams have risen to the challenge to build great products, acquire customers, raise capital, and to grow their companies. Looking back, we are humbled by their efforts and the results they have achieved. Daniel will talk more about some of these successes shortly. With that said, let's dive in. 2021 was a big year for North Coast. In addition to achieving 3 positive exits, which Daniel will share more on, we continue to build out our platform and focus on our core investment thesis, early-stage business-to-business software ventures. In 2021, North Coast held final closings for 2 new funds. The first is a $15 million seed fund 4. The seed fund invests in companies with a minimum viable product, typically with 3 to 5 employees and modest demonstration-level revenues. We look to deploy $250,000 initially and maintain capacity to participate in follow-on rounds. The second fund is our $23.6 million Acceleration Fund 2. The Acceleration Fund also invests primarily in B2B software companies, but at a stage when they have achieved product market fit, typically having $1 to $10 million in revenue, and they're raising a Series A or B round. This fund looks to deploy $1 million initially and maintains capacity to participate in follow-on rounds. Together, these 2 funds represent over $38 million of new capital from over 225 individual investors and the state. This group and the broader 400-person North Coast investor base is the most significant asset we bring to 2022, the largest fund of our kind in the country. The group includes 42 successful startup founders, 50 technologists, and over 100 members of the corporate community that bring industry and functional expertise to bear. Last year, we conducted a HubSpot survey to assemble what we think is the country's most robust database of early-stage investors. It allows us to map key skill sets, experiences, and network connections to the needs of our portfolio companies. This is what differentiates North Coast. More than 400 member investors, the data-driven information that we have from these investors, our ability to activate a targeted subset of these investors so that we can apply their expertise to screen opportunities, conduct diligence, and to serve on company boards. Perhaps most importantly, though, this network has proven ready and willing to open doors on behalf of our portfolio companies. Several examples include actions that led to Progressive Insurance becoming a customer of Remesh, Joann Stores becoming a customer of Navistone, Oswald becoming a customer of TPA Stream, First Energy becoming a customer of Exactor, and Morgan Stanley becoming a customer of Performex. One of the ways we acknowledge the contributions of our investor members is with our annual Member of the Year award. This year, we're excited to honor an investor who has made a significant impact on our fund, Doug Weintraub. As many of you know, Doug is currently the CEO of Bounce Innovation Hub in Akron and is a longtime active angel investor, serial entrepreneur, and mentor. Doug agreed to serve as our board director for ScriptDrop, one of the fund's largest investments. He has done a terrific job representing the fund and successfully recruited an industry all-star to serve as the independent director. Doug has also frequently opened his Rolodex to help open doors for North Coast and our portfolio companies. In addition to the traditional Crystal Award and Bottle of Angel's Envy, Doug will receive a one-of-a-kind NFT to commemorate the award. The NFT was created by our portfolio company, Hardy, which has developed the first NFT platform for professional awards. They've also created an NFT celebrating each of our fund's recent company exits, and they're inviting all of our individual investors to commemorate those wins and claim the NFTs. North Coast investors can download the Hardy app and find the North Coast Ventures Trophy Collection to claim yours. Beyond our membership, another important part of the North Coast network is the nearly 100 VCs, angel groups, and family offices that we've invested with. As a result of relationships with many of these groups, for the first time in 2021, our new funds invested in out-of-state companies. So far, we've invested in 3 out-of-state companies from the Bay Area, Florida, and Maine. We expect to see increased out-of-state deal flow from these partners in 2022 and beyond. Before handing it over to Daniel Luketic, I would be remiss to not take a moment and acknowledge the recent passing of John Houston. John was a friend and a mentor to many of us at North Coast and a giant in the world of early-stage investing. He founded Ohio Tech Angels in Columbus, assisted in the formation of North Coast, served on our first executive committee, and was a member of Funds 1 and 2. John was an active investor, a tireless leader, and an innovator in the world of angel investing, going on to serve as chair of the National Angel Capital Association. He left a lasting impact on our founders and investors across the country and will be missed. For those of you wishing to honor John's life and legacy, his family has encouraged memorial contributions in his name to the Angel Investor Foundation's Seed the Future campaign. As we look forward, I am pleased to pass the baton to Daniel, who will walk us through the rest of the evening's agenda.
Thanks, Todd. Hi, I'm Daniel Luketic, the Director of North Coast Ventures, and I'm excited to summarize our investment activity and portfolio headlines from 2021 and early 2022. As I do, our ask of each of you is this. If you think you could assist a company, please reach out to one of us. If you don't have our email address, contact us at info@northcoast.vc. Every connection to a customer, an investor, an advisor, an employee is valuable and appreciated. In 2021, we completed a number of investments in companies that are new to the Seed 4 portfolio. You'll learn more about Thrivable and Leasecake later on in the presentation, but I'd like to briefly introduce the other 3 new portfolio companies now, starting with Unify, which is led by serial entrepreneur Steve McHale, the former founder of Explorus. Unify is developing a platform aimed at dramatically simplifying the hiring process for job seekers and employers. Bubble is a Silicon Valley-based company that is quickly gaining traction with their solution that digitally bundles home and life insurance. Finally, Streamo is a Maine-based ERP platform for cannabis operators. We also completed a number of investments in companies that are new to the Acceleration 2 portfolio. Although they are new additions to the Acceleration portfolio, each of these companies previously received investment from one of our seed funds. You're going to hear more about each of these companies later on. Finally, we completed follow-on investments in 11 portfolio companies that are shown on this slide. We deployed over $5 million via second and third checks in these companies. Next, I'm excited to introduce 5 of our portfolio company CEOs that will share brief presentations that are mostly focused on what their companies do, traction they accomplished over the previous year, what's next, and how we can help. As I do, I'd like to briefly set the stage with this chart that summarizes the composition of our portfolio. We are now managing 4 seed funds and 2 acceleration funds. We've raised roughly $76 million and invested in over 65 companies to date. In addition, through our individual member sidecar investments and SPVs, we've brought another $25 million of investment to the table. I would also like to summarize the exit activity over the past year, starting with Able. Able was recently acquired by Bullhorn, and we're going to hear more about that exit from the CEO in just a minute. Wiser was acquired by EAB early in 2021, after the COVID pandemic led to an incredible demand for the company's education platform. Vitalize is now part of our portfolio after acquiring Seed 4 portfolio company MedPilot in an all-stock transaction. And Collaborant sold to private equity in 2020, but is noted here as they distributed the full holdback this year. There were 2 additional exits where we anticipate recouping some of our investment over this past year. Our holdings in I2C were bought out in a cash transaction, and Juventus executed an asset sale agreement, which includes upfront cash payments and the possibility of future royalties. With that, I'd like to introduce Gerald Hetrick, the CEO of Able, a Seed 3 company that exited just recently. He will walk us through the company's path to exit.
Thanks for that introduction, Daniel, and thanks to you and North Coast Ventures and everyone for having me here at the annual meeting again. So for those of you who don't know me, my name is Gerald Hetrick. I am I up until very recently was the CEO of Able. Very recently, because as many of you probably know, we were recently acquired by Bullhorn, who was our largest partner and competitor, and I'll tell you a bit more about that today. But again, I appreciate being here, and I'm just going to take a few quick minutes and tell you a bit more about Able and a little bit about our journey to exit. So thanks very much. All right, just as a to quickly catch everyone up, we were launched inside of Talent. We were launched inside of Talent Launch by Aaron Grossman and his CIO Rob Sable. 6-7 years ago, they had this idea to create an onboarding tool to kind of improve their major hiring at scale issues around compliance and accuracy and efficiency and things like that. So they built this product. It worked wonderfully for them internally, and then they decided to commercialize it and brought me in early 2017 to effectively found the business at a true commercial level to take it away from the staffing agency, to launch it as its own SaaS company, raise money, do all those things. So in 2017 we launched as EmployeeStream, and we ended up rebranding last year, 2020 now, as Able. Along the way, we raised over $12 million, or really close to 15 when you include debt, from North Coast Ventures and others, including Jumpstart, Plymouth Growth Partners out of Michigan led our Series B, Rev1, Ohio Innovation Fund, M25 out of Chicago, and many local angels. Really gave us a lot of support from a capital perspective. Over the last couple of years, we became the leader in candidate onboarding for the North American staffing industry. We grew to over 200 customers, including most of the largest staffing firms in the world. We grew to over 40 employees. And at the time of exit, we were just crossing the 5 million in ARR threshold with a very strong pipeline and a lot of growth in front of us. But the most exciting news is that we were acquired about 6 weeks ago now by Bullhorn. Bullhorn is the largest staffing tech provider in the global technology space for staffing. They were our largest partner by far. We had more than half of our customer base were Bullhorn customers, and they were also our largest competitor. They were had recently had a strong interest in the talent experience market, particularly around onboarding. So real quick, the reason we were so successful is because hiring and staffing is so complex. You take the complexity and you add on massive scale, the hiring of tens of thousands or hundreds of thousands of users, and you end up with a tremendous amount of bottom line pressures around compliance and accuracy and time to hire. We did a great job of providing this awesome candidate experience, and making it such that people weren't walking away during the onboarding process, and actually getting from interest in a job to hiring in a very efficient way. So when you combined our great UI, very modern workflow-oriented tool, and great automation, we were able to dramatically improve speed to hire and onboarding accuracy issues for staffing companies. thus helping them, solve some of their biggest problems. People have been asking me, what made us successful? What were our characteristics? Really quickly, there's a bunch, but we were always customer acquisition minded. So when all else fails, go sell something. We had a very strong early and ongoing investment in our product and engineering teams, and making sure we were building software in the most modern, efficient way possible with security and compliance in mind. We recruited great people. We were able to, after our last round, particularly hire some really awesome leaders with some experience in the space, very bright, dynamic people. I brought kind of this notion of being extremely self-aware. Dream very big about what you can do, but operate very practically. Operate within the confines of the money you were given and the investment thesis that you're supposed to be fulfilling. Market awareness matters. Make brand a huge differentiation, and frankly, have incredible support from your stakeholders. So I love calling out Alan Brenner, but Alan Brenner was just an incredible board member and investor and member of North Coast Ventures for us, and he was just an example of how great support helped us along the way. I talked to you a little bit about Bullhorn. Bullhorn was the largest, like I said, the largest staffing tech provider. We were the latest of their 10 plus acquisitions over the last few years, and they've gotten really good at that. Our product is the third onboarding product they've acquired, but it's the most feature rich and the most candidate experience centric. So it made us a must have when they thought about attacking the market. They're doing a full evaluation of the product, but overall, we're feeling pretty strong about our opportunity to be in their product suite long term. And then really our entire team. One of the things I'm most proud of is our entire team landed at Bullhorn. Almost everyone has full-time roles there, and almost the entire team, took great roles.
Thank you, Gerald. Next up is Amanda Epp, the CEO of ScriptDrop, a Seed 4 and Acceleration 2 portfolio company that nearly doubled revenue in 2021.
Thanks, Daniel. Again, I'm Amanda Epp, and I'm the CEO of ScriptDrop. Why ScriptDrop exists is because everything can go right in the patient's prescription journey. The doctor writes the medication, access is cleared by all of the healthcare professionals, and the pharmacy does their part to dispense the medication. And still, the patient doesn't pick it up. And oftentimes we see that it's not always a financial reason. There are things like $0 copay in the data. And actually, 17% of our patients tell us that it's a financial issue. The rest of the reasons are because I live too far from the pharmacy, my caregiver's not available today, or I just had life get in the way, or I have anxiety going to the pharmacy to get my anxiety medication. All of these reasons play into why prescriptions are abandoned and patients do not get on therapy or stay on therapy. Something like ScriptDrop connects healthcare professionals with patients in a more convenient and accessible way. So a little bit more about ScriptDrop in our company snapshot. We were founded in 2016. We have scaled to over 9,000 different pharmacies across the US. We're even available in Alaska and Hawaii. And really what makes us special is we've built out this network with the intent of having a tech-enabled platform that integrates into the healthcare ecosystem and provides value to all of the constituents in the healthcare workflow. So a little bit more about what makes us unique is we take what I like to say the healthcare approach instead of the logistics approach. So healthcare is already very fragmented, so we didn't want to introduce a new layer of complexity into the industry. Our approach has been very thoughtful in thinking about interoperability from the very beginning, value to each of these different providers on the right-hand side, pharma, providers, payers, pharmacies, and especially the patients. We also take the healthcare approach because we care about any and all patients. Those patients that are farthest from the pharmacy are the ones that likely need it the most. So ensuring that we have access to those patients and we have access to our delivery network to provide them as quick of medication delivery and access that they need. Additionally, why we say we take the healthcare approach is because we can integrate directly into the healthcare ecosystem. So we're in workflow and we know how important it is to save every healthcare professional, even just one click. It means so much when it comes to reducing administrative burden and improving patient care. So how it's going? We've actually crossed over 6 million deliveries to date. We crossed over 5 million just last year. We do about 1 million deliveries every quarter. We ended 2021 with 29 million, and we're looking to double again. And it's because of all of our great partners that you see here on the right-hand side. Our pharmacy partners, our pharmaceutical partners, our fulfillment partners, and our health systems. So a little bit more about where we're going this year and what we're really excited about. So our two main objectives is one, to get further upstream in the prescription journey and in their workflow, embedded into the healthcare ecosystem even more. So that means integrations into telemedicine opportunities, working really closely with pharmaceutical manufacturers to ensure that all of their patients have access to delivery, and also health plans, making sure that their patients with specific disease states that cost them a lot of money if they go into the hospital have access to prescription delivery. So really getting stickier and more embedded into the healthcare ecosystem. We're also going to continue to expand and grow our core pharmacy and health system network. So improving our delivery process, adding new features and technology for our current customers, as well as expanding to new pharmacies across the US. And from a product perspective, what we're really excited about is because we've crossed over 6 million deliveries now, we have so much more data and insight to be able to leverage what we know to then suggest the best way for patients to get access to their medication. Whether it's a generic medication coming through our workflow, that's a maintenance medication, that the patient's 20 miles away from the pharmacy, we should just go ahead and deliver it to the patient via USPS or something like that. Or if it's a temp control medication that needs to get to the patient quickly, or an antibiotic, we're going to suggest something like an on-demand stat delivery, which happens within an hour. So really leveraging our data to improve patient care and how they're getting on therapy, while looking at the costs in the ecosystem for everyone involved. Thanks to North Coast, we've been able to really improve and expand not only just our management team in the past year, but also our board. North Coast has led a round in 2021, and we brought on 2 new board members, including an independent who's really helped us provide deeper healthcare connections into the pharmacy and health plan space. So we were really excited about partnering with North Coast to set us up in 2022 for success. It also allowed us to bring in new team members, like our CFO, Apoorva Desai, who has experience in Silicon Valley, as well as in consumer technology. So bringing a different type of experience to our management team. And finally, in true North Coast fashion, where all of you can help right now. North Coast is always doing a good job of, asking us where we need help. So it's typical for them to also ask me, to ask everyone here where we could use help. So we do have a current capital round open right now. Intros to new investors, especially in the healthcare ecosystem, are of course welcomed. Also, introductions into our new partner segments, pharmaceutical manufacturers and health plans. Health plans, we're typically looking for folks in strategy or innovation, health systems that also have payers or regional health plans have really been interested in integrating prescription delivery into their workflow. Next, pharmaceutical manufacturers, typically our contacts are folks on the brand teams, patient access, market access, and of course, companies with branded medications, not generics. North Coast was a great partner for us in 2021 and really set us up working closely together for 2022 for success. So we're looking forward to an amazing year. Thank you so much, everyone. That's it for me, and back to Daniel.
Thank you, Amanda. Next, I would like to invite Yuval Brisker, the CEO of Alviere, to share more about their 2021, a year in which they achieved a number of incredible inflection points. Alviere is a Seed 3 and Acceleration 2 portfolio company.
Thanks, Daniel, for that great introduction, and hello to all the North Coast Venture stakeholders and investors, shareholders, and partners. I'm Yuval Brisker. I'm the co-founder and CEO of Alviere, and I'm delighted to be with you today. Alviere is one of a crop of new next generation FinTech companies, financial technology companies. In our case, we have a fully end-to-end platform for providing financial services to companies that want to provide financial services to their customers. So our what's called embedded finance platform allows any brand anywhere in the world to offer up financial services, whether it's bank accounts and debit cards, payment services, prepaid cards, gift cards, international money transfers, the ability to buy and sell crypto, all that to offer those brands to offer it to their own customers. Do that with the most advanced technology in the world, with a complete end-to-end solution that is pre-integrated, that is a one-stop shop, that customers only have to deal with us. And then we provide all the relationships, all the connectivity into the financial services system, all the regulatory umbrella and licensing needed to provide this kind of financial capabilities. Our battle cry is we provide financial services to companies that already have customers, and we go to where the customers already are. We launched the brand in the summer of 2020, right in the middle of the pandemic, and we're now into our second full year. Last year, we closed about $70 million worth of contract value, so a huge amount of money for a first-year operating company. And this year, we're expecting to close a lot more than $70 million. I would say, triple, quadruple. Our target is big. We're announcing, some really significant partnerships, and the most important thing that's happening this quarter is that we're going to be going live with our first big customer. We already have a number of customers live, but this is the biggest deployment of our solution is with Boost Mobile. We're going to be deploying a whole new line of business for Boost, which is a subsidiary of Dish Network, which is another customer of ours. Boost is going to be launching a new brand called OmniMoney. It's going to compete with Chime and with Varo and with other neobanks, but different than Chime and Varo and those other neobanks. Boost already has 9.5 million customers. Of those 9.5 million customers, about 30% still pay in cash. So there's a huge opportunity to convert them into a Boost bank account, into a Boost mobile, which is going to be called OmniMoney bank account, but it's going to be open to the public. So anyone who wants to can, boot up a OmniMoney account, and there's a lot of incentive to do it. The core, ambition is global, and we're going to be operating this year already in a global setting. We already have a very strong pipeline in both Europe and Mexico, and so our ambition is to, by the end of this year, to have customers already launched abroad. Relationships with brands. We're really going after any kind of brand that has customers, a loyal customer base that has sort of emotional connection to the brand, and that can be, a retailer, an automobile company, an airline. If any one of you have a connection in any one of those industries, don't hesitate to talk to Todd or to Daniel or to reach me through them.
Thank you, Yuval. Next, I'd like to invite Taj Adhav, the CEO of Seed 4 and Acceleration 2 portfolio company Leasecake, to describe the company's fast growth since our investment in 2021.
Hi, my name's Taj Adhav, and I'm the CEO and co-founder of Leasecake. Leasecake is the operating system for commercial real estate location management. We created a new market no one knew existed, and we launched 4 years ago, based in Orlando, Florida. We've all heard it. The game of real estate is all about location, yet people still inefficiently manage them. All the outdated systems have fallen behind in a world that got way more complicated. The world has broken the incumbent systems, no longer able to handle complex demands, instant awareness, and knowledge sharing. People, in order to do their jobs, depend on information and each other to be responsive and responsible. The current model is very inefficient when you're trying to grow top line. Delayed awareness can impact the bottom line, while information trapped in knowledge silos wastes months and years of time. There's a disintegrated view of the problem that doesn't meet the needs of the market. Things have gotten way more complicated and connected. Up until now, nobody noticed. But we have. We live in the age of immediacy where we can't wait for answers. So what's going on? There's a bunch of disjointed solutions out there that don't talk to each other, like purpose-built tools that are about compliance and accounting. More often we see spreadsheets, Dropbox, calendars, or other things that aren't optimized for the future of work. These general purpose tools are no longer good enough. Leasecake is in the answer business. We provide quick access to location info in a core platform with proactive notifications, awareness for all critical business events, making it easier to take action with fast collaboration to drive better decisions. We drive answers, awareness, and action for all of your locations. We've reached 1 million in ARR, 5 times the prior year with 127% net revenue retention. Our cohort analysis shows stickiness and engagement, where customers spend more on services while they grow. We're a category leader in location management, where 95% of our revenue comes from multi-unit tenant operators across multiple segments. We also target brokers and tenants who are landlords too. Leasecake creates a virtuous circle through sharing, and this is one example of network effects. A broker brought their client to Leasecake, resulting in 4 new customers who invited their accountants, attorneys, lenders, and brokers. It's a flywheel in the ecosystem when complementers have advantages being part of the platform, and each of them is a natural distribution partner for our white label solutions, and it's working. We charge an annual prepaid subscription per location, depending on the level of service, with customers signing multi-year agreements. Our opportunities come in 2 sizes. The enterprise sale takes 6 to 8 weeks, while an entry-level sale is same day or 2 weeks. Through product-led growth and verticalized sales teams, we plan to quadruple revenue this year, reaching 18 million in ARR by 2024. With over 6 million leased locations across the US, it becomes a $10 billion market because the opportunity is global, and we're taking a slice of a very large space in the future of work. Our exit strategy will be to strategic buyers who want to expand their offering to new markets, and acquirers who depend upon real-time data for competitive market intelligence. Our team has expertise in enterprise SaaS with over $200 million in successful exits, and a prehistory at Channel Intelligence, which exited to Google. Dave Schrader is our head of product, held key patents at CI, which led to that exit, and worked in supply chain and human capital management. He's the brains behind the solution. And Bill Kunicki, also from CI, is our head of engineering. Chris Nashid is our VP of sales, who grew sales to $250 million at EverQuote, which recently IPO'd. I was a CPA for 15 years, was in the Big Four, spent a decade as an Imagineer at Disney, managing a couple $1 billion in projects, and then an early hire at Channel Intelligence, first to CFO, then moving into biz dev. Thank you, and we welcome you to join us. It's a piece of cake.
Thank you, Taj. Finally, NCV member Kevin von Kaiserling, the former CEO and founder of Keyfactor, and newly appointed CEO of Seed 3 and Acceleration 2 portfolio company ReadySet Surgical, will share how the company performed last year and, more importantly, what's to come next.
Thanks, Daniel, for the introduction. As Daniel said, my name is Kevin von Kaiserling, and I just recently joined ReadySet Surgical. I've been with the company for about 90 days, and I'm getting my feet wet and very excited to share with you the story about ReadySet. Prior to ReadySet, I was with a company called Keyfactor. Keyfactor is one of the world's leading cybersecurity software companies, and happens to be headquartered right here in Cleveland, Ohio. I retired my operating role at Keyfactor in Q1 of last year. And after Q1, I started thinking about getting involved in the venture capital community, and was fortunate enough to meet some of the folks from North Coast Ventures who hooked me up with Todd and Daniel. We had a great conversation. And so I invested in the last 2 funds. And then over the summer, they were looking at their portfolio companies and said, Kevin, there's a company we think you should take a look at. And so I went out and met the management team at ReadySet, and thinking about how we could look to get the company oriented to strengthen its go-to-market plan and really make an impact in the community. And I've just been delighted and thrilled with the story at ReadySet. So with that, I'm going to give you a quick video about what the company does in the space that we play in. Then I'm going to walk you through the operating plan and the outlook.
42% of implants requested in surgical procedures are off-contract or non-preferred. 38% of implant charge sheets have price discrepancies, and up to 50% of implant kits are delivered late. If improving the profitability of your implantable device supply chain is an issue, you're not alone. Eliminate non-compliant purchasing, late deliveries, revenue leakage, and wasted staff time, all with a single platform. ReadySet Surgical, a complete solution to improve the profitability of your implantable device supply chain.
So that was just a little overview of the company and our profile. Clearly, we play in supply chain software management for the healthcare industry. We've got a great story. We've landed 28 clients to date, which represents 78 different surgical centers across the US. It's nice that we've got some great names like Kaiser Permanente and Bon Secours to help as reference clients to accelerate our sales story. The most powerful thing about the ReadySet story is the hard cost dollar savings we bring to a hospital. This is an actual slide from one of our clients where in last year in 2021, we took $4.8 million out of their sterilization costs and another $1 million in fixing billing reconciliation problems, saving the hospital over $6 million. That's the kind of compelling story that makes it easy to sell software. If we think about the TAM for the company, our total addressable market, we look at the market from GPOs and IDNs, as well as medical device manufacturers, at about a $5 billion marketplace. So plenty of opportunity for the company to grow. When we look at our pipeline, it's healthy and growing. Last year, we closed 1.1 million in new CAR. This year, we'll close close to 1.8 million in CAR with a total pipeline of 9 million. So very healthy and looking forward to a productive year. Our gross margins are healthy. We're typically what you think for a B2B SaaS company. We're running between 70 and 85%. We're on the right track. If you look at our contracted annual recurring revenue, which is the most important metric of any B2B SaaS company, we've got a healthy track record growing year over year at 50% this year. Next year, we're projecting 80, and the outlying year at 73%. Our investment for the company is going to be in our go-to-market sales and marketing team. So today, the company has 18 employees. We're going to be expanding to doubling that this year to 41 employees. So a ton of folks that we want to bring on board, mostly in our sales and marketing teams. My ask, if you happen to know any supply chain managers at hospitals, VP of supply chain, I'd love an introduction. If you know folks at medical device companies like J&J or Medtronic or Abbott, would love an introduction. But perhaps the most important thing you could do is if you know folks that are looking for employment, you've got top performers in sales and marketing, sales leadership, we're hiring, and I'd love to get their resumes. So you can forward those to me at kevin@readysetsurgical.com. And with that, I thank you for your time and attendance, and I'll turn it back to you, Daniel. Bye-bye.
Thank you, Kevin. Now let's move on to headlines from the broader portfolio over the past year. We have a number of other portfolio companies that appear to be on a path to a successful exit. I'll share brief headlines related to a handful that we are really excited about. Starting with OnShift. Seed One sold its interest to Clearlake Capital as part of a 2018 private equity transaction, but Acceleration One still holds an interest in the company. OnShift provides a human capital management solution. The PE firm Clearlake is a leading firm and continues to be a great partner for the company as it's completed its first acquisition and has grown to over 200 employees. 2021 annual recurring revenue was over $40 million, and there's still plenty of room for growth in 2022. Remesh is also continuing to experience rapid growth. Their platform delivers the benefits of focus groups with the statistical significance of larger scale polling. Remesh's bookings run rate crossed over $20 million, and the company was ranked 630 on the Inc. 5000 list. Their team has grown to over 160, and their customer list has grown to include most of the top global CPG companies, management consulting firms, and market research firms. Navistone weathered the COVID storm, which impacted a number of their customers in the cruise line industry. Navistone provides web-powered direct mail to consumer-facing companies. They were able to achieve 2021 revenue of nearly $7 million while adding 42 new customers, and are well positioned to hire 30 new team members this year. Amplifund is led by a seasoned CEO and provides grants management solutions. The company grew ARR to $6 million last year at over 70% gross margins and are delivering well for their largest customer, the state of Illinois. This was a significant year for Standard Bariatrics, which develops surgical devices for bariatric surgeons. They received their FDA clearance for their Titan stapler in April, which led to the close of a $35 million Series B round. The new stapler product reached $1 million in sales in November of that year and has since passed 1,000 clinical case uses. 2021 was also a big year for 7Signal, which has developed a platform that continuously troubleshoots wireless networks for performance issues. The company grew ARR to over $6 million while adding 73 new customers. Renewing their contract with IBM was also a significant win for the company. Actual successfully transitioned from pilots to multi-year commercial commitments last year. Actual's platform verifies credentials that can be shared instantly between clinicians and their organizations. The company closed a $10 million Series A equity financing led by Flare Capital Partners. They ended the year with over $1 million of ARR and 21 full-time employees, and they've secured a number of large healthcare organization customers. This was a transformative year for Genome Oncology, which offers software capable of identifying tumor mutations and corresponding therapies. The company booked multiple seven-figure deals and ended the year with $4.5 million of revenue. They appear to be well-positioned to ride the growing personalized medicine wave. As we mentioned, Vitalize acquired Seed4 portfolio company MedPilot in an all-stock transaction this year. Vitalize combines a Medicare ACO, virtual doctor's office, and digital health platform. Their 2021 revenue was $16 million as they grew to serve 290 practices and 130,000 Medicare patients. The ability for Vitalize to provide direct care through direct contracting was a huge advance, as well as a number of other significant firsts for the company. TPA Stream continues to make steady progress and expand on their market potential. Their software is built to streamline healthcare administration systems. TPA Stream added Bill Fisher, a senior vice president at Oswald Companies, as their independent board member. Oswald is the largest health insurance brokerage in Ohio, and Bill has brought tremendous validation for their technology and the opportunity to grow in the employee benefits market. The company ended the year with revenue of over $1.5 million. Finally, we have Thrivable, a company that we just made our initial investment in back in January of 2021. Thrivable has developed a real-time market research platform with on-demand access to their comprehensive patient database. The company has already accumulated over 45,000 panelists and crossed the 1 million annual contract value milestone in January of 2022, with customers including Medtronic and Tandem Diabetes. They also sold a division of the business last year, Diabetes Daily, which helped provide more resources to accelerate growth and extend runway. As I wrap up with our portfolio headlines, I would like to remind our investor members that a detailed report, including a chart like the one shown here, along with a written narrative about the progress and significant updates related to each of our portfolio companies, can be found on the member portal. This example chart shows the overall composition and performance of our Seed 3 portfolio. The portal is also where you can access GAAP financials and K-1s related to your investment. You should have received this type of detailed reporting prior to the event today. With that, I'll turn it back over to Todd for the Fireside Chat.
Well, thank you, Daniel. We have shifted floors here at Key Tower and are with Chris Gorman, the CEO of KeyBank. Chris, thanks for joining us.
Sure, Todd. Great to be with you this afternoon.
Terrific. And Chris, for background, you are a 30-year veteran of Key, having started out on the investment banking side at McDonald, and then rising up through the ranks in the capital markets group, the corporate banking group, and I understand you led the integration for First Niagara through that acquisition process and became CEO in 2020.
Yeah, it was an interesting time, certainly, to become CEO. We've got a great team, though.
Terrific. Well, we're happy to have you here, and we'll dive right in.
Sure.
So let's talk football. I assume you watched the Super Bowl?
Of course.
Excellent. So the two of us, along with 50 million other Americans, saw a whole host of new commercials this year from financial services companies like Coinbase, Crypto.com, other crypto exchanges. And I'm curious what you think that tells us about the future of how FinTech is being delivered, marketed to consumers, and what it might mean for a traditional bank like Key.
Well, I think first of all, if you look at all the commercials and the fact that they were playing in SoFi Stadium, the first thing it says is that FinTech companies can raise a lot of capital. That's pretty clear. But I think more to the point, I think FinTechs are going to be part of the fabric of banking for the future. And at Key, we've been sort of ahead of this. We've been focused on this for about 15 years, investing in FinTech companies that we think can help us deliver what we call targeted scale to our customers. And so we feel like we're part of the ecosystem. You may know we have a born FinTech company called Laurel Road that we bought in April of 2019. And then in March of 2021, we launched what we call our National Digital Affinity Bank. So we took that business. It was a single, and I'll come back to this in a second, because it was a single product business refinancing loans for dentists and doctors. And we turned it into a complete relationship business. And so now on the Laurel Road for Doctors platform, not only do we refinance loans, 20% of our $14 billion in mortgage originations last year were for doctors. Many of them were completely digital. And of course we have checking, savings, credit cards, et cetera. For that group of people, if they're not seeing patients, they're not running their business. And so the notion of doing things digitally is great.
Terrific, and it seems like a meaningful transition for Key. Traditionally, banks grow by buying other banks, but you mentioned Laurel Road, a designated digital bank. But you also bought a payments platform and bought an analytics platform and consultancy. Maybe, how do those other pieces fit in?
Well, that's a great question, Todd. It all starts with our clients. And while some people have invested in a variety of things, we start with how can we be more impactful in the marketplace with our clients? And so in the case of Laurel Road, which you just mentioned, obviously healthcare is one of our 7 areas of focus. And so obviously we were keenly interested in that. When you think about acquisitions like Zup basically enables us on the commercial side to go about helping people digitize their entire enterprise. We can onboard a variety of products concurrently. AQN, which is another business that we bought just last year, is an analytics firm. And the team at AQN had actually built the whole analytics engine at Cap One. We were a customer of AQN, so we were acutely aware of their skill set and their capabilities. And I always say you can't be a great digital company without great analytics. One of the things about banks is banks have struggled in the past to sort of find the signal and the noise. The amount of information we have is phenomenal. But the key is what is actionable. And so I think the whole notion of investing in analytics is really, really important. So it all starts with our clients. The other thing I would mention, though, when you buy digital companies like AQN, like Laurel Road, is we get a lot of great employees. We've been able to retain over 85% of the employees that we've purchased from when we've purchased these entrepreneurial businesses, whether it's the ones you and I have already mentioned or some boutique investment banks. And I think that's a real skill, and I think it's going to be a skill that's going to be required of banks as you go forward, because clearly the integration of digital and analytics and other knowledge workers into banks that have different skill sets. For example, in San Diego today we have close to 50 full stack engineers, and we continue to build that business out. So it's been great.
So with the digital approach you're taking today, I think it's not a leap to say you're transcending geography, right? So the first Niagara, you bought a series of places, right? Of access to places and branches.
Exactly
and
right.
In the digital world, you're now creating a product that blends, and I understand that with Laurel Road as an example, the overwhelming majority of customers are not in the footprint of Key today. So how does that better allow you to compete nationally, whether with traditional banks or with the PayPals and Venmos and SoFis of the world?
Yeah, great question, Todd. Well, first of all, I think the model of the future, and it's yet to be determined, no one knows what the right mix of digital and physical locations are, but it will be some combination of both in banking in general. Now, the nice thing about targeted scale is when you build a national digital affinity bank around certain customer base. Let's talk about doctors for a second. They are very diverse in who becomes a doctor, but their career path is very homogeneous.
Yeah.
You go to medical school, you become a resident, you do a fellowship, you become an attending physician, you're now in your early 30s, you go from making minimum wage to signing your first contract. All of a sudden you have a lot of debt, you settle down, you buy a house, you typically start with family formation. And so there's a lot that we can do. There's a very similar path and profile to a lot of our medical professionals. We have 48,000 medical households that we've brought on to Laurel Road just since we bought the business. But going back to the geography, whether you're an orthopedic surgeon and you're in Tampa, or you're in Topeka, or you're in Tacoma, where, by the way, we have a lot of branches, your needs are the same. And what this does for us, only because we use targeted scale. If you just tried to build a digital bank, you couldn't do it. A lot of people have tried to do that. But if you go after a certain group of people that have common needs, customer needs, you can really solve it. And so we've gone from being in 15 states to being in all 50 with Laurel Road.
Terrific. And sounds like some of these things you're building, some things you're partnering with, and then you're also working with large organizations like Google.
Sure.
I saw recently that you put together a large and long-term partnership with them, I understand, to power the digital banking experience. So maybe just give us a sense of what the role of a large player like Google is for Key.
Right. We have always, Todd, spent a lot of time trying to figure out what are the best in class providers of technology. And one of our strategies is to digitize our enterprise end to end. Banks have a lot of handoffs, and when you have a lot of handoffs, that's where mistakes happen. That's what slows things down. So any place where we can replace clunky handoffs with software that's predictable, that doesn't make mistakes, and then we can redeploy our teammates to go out and do what they do best, and that's serve their clients, take ideas out to their clients. Google's just a continuation of that. So we announced a large deal, our Google Cloud deal. It'll be over the next 3 years, we will transition from having, say, 40% of all of our applications in the cloud to having 80. And with that comes some advantages. We can leverage some of the things that Google brings, whether it's AI or a little bit different angle on some security elements. So we're very excited about it, and it's the next logical step forward for us as a digitally forward bank.
You mentioned best in class. One of the companies that we've invested, we think is well on its way to being best in class, Alviere, and they presented earlier in the program. Banking as a service, right? Where traditionally you would need to navigate the regulatory regime, the financial wherewithal. You'd need to be a much larger company versus a startup. These banking as a service companies are now able to offer more targeted services to the customers of other large companies. Maybe give us a sense what you think the future of that market is.
I think banking as a service is huge. And I think we're in the very early innings. I mean, what I just described as Laurel Road is really banking as a service. I mean, people don't want to toggle between a million APIs and go on a bunch of different places to get things done. I think all of us have experienced banking as a service. If you think about your Uber experience, basically it's all embedded. You basically call the car, you track the car, you pay for the car, you rate the driver, and it's all embedded in one piece of software. And so I think banking as a service, embedded banking is where it's going. We've been part of many public offerings just over the last 18 months that are companies, whether it's Toast, that obviously services the restaurant area. So I think we're in the early days, and I think it is the future. I think as people have made the pivot to digital, now how do you make it so digital is easier and more integrated and more what I consider to be end to end? I think it's going to be in a really exciting place. We've positioned Key for some time for what we see as just a major sea change.
Excellent. Well, you mentioned talent before, the notion of developing a much broader and richer talent base with these acquisitions. And it strikes me that Key has 18,000 employees, which is a lot of mouths to feed, a lot of people on the team. And in today's dynamic HR environment with work from home, competitive salaries, the great resignation. I'm curious what Key is doing holistically at all levels of the company to recruit and retain the best talent.
Well, that's the secret, right? You have to recruit, train, and retain, and we focus on each of those. We had a great year last year in that we grew our senior bankers by 10%, the whole universe of senior bankers. We saw it as a great opportunity to bring new people onto what we think is a differentiated platform. Having said that, the great resignation is real, and clearly what we're seeing in terms of wage pressures are no different than what probably you and all your portfolio companies are seeing. If you look at our entry-level positions, and this is based on sort of people's background, obviously, the job, the location. Our entry-level positions in the last 5 years, we're paying over 40% more at the entry level than we were 5 years ago. So there clearly is wage inflation, as you know from what you do day in and day out, around areas we've discussed this afternoon, areas such as analytics, areas such as technologies, such as people that are truly full stack engineers. There's clearly wage pressure. And so our job is to make sure that we get the best people and we keep them. And we are very responsive to where the market is, because I, for one, believe you need to know where the market is and you need to respond. And that's what we've done.
So, North Coast has enjoyed a strong relationship with Key over the years. Several executives at Key are investors of ours. A number of our companies have partnered and worked with Key on various initiatives. So I'm curious how you view more broadly the role of Key in the startup innovation ecosystem here in Cleveland and beyond.
Well, I think we have a huge role to play, and frankly, Todd, we intend to play it. We have a very, very significant investment banking business that's focused around technology. And whether it's banking as a service, we were a leader in software as a service when that first started. So that this is an area where we have spent a lot of time. And I think we raised last year, not all for small companies, we raised $100 billion for a variety of companies last year. I think we can play a huge role. We're in the game. We've been in it for some time. I think we see 15 deals a month.
Wow.
So just that's for our own account. That's not our investment banking business. So I think we have a huge role to play. And by the way, FinTech has a huge role in the future of banking. So not only do we have a role to play in helping these companies, all these companies have a huge role to play in helping us as we figure out how we can continue to win out in the marketplace.
Terrific. Well, that is great to hear. And I, on behalf of the investors of North Coast, and I think the entrepreneurs in the region here, thank you for that commitment, and look forward to being able to work with you more closely.
Well, great. I look forward to it as well.
Thank you,
Todd.
Thank you for joining us. We really appreciate your spending the time and sharing your perspective. And I'll take a moment just to shift to camera one here and also thank the entrepreneurs that presented tonight, our investor members for all of their support, and importantly to Thompson Hines New Venture Group for sponsoring our annual meeting tonight. Everyone that registered will receive an email momentarily with a survey link. We ask you to provide us not only feedback on the event itself, but also please indicate if there's any introductions or perspective you might share for our portfolio companies. Every year this adds new interesting opportunities and creates value, so we hope you'll all take a moment to do that and wish everyone a successful 2022.